The Bank of England Monetary Policy Committee needs to be reformed. I personally think that is glaringly obvious. Its performance over the last 3 years has been dire. We had an inflation crisis following the reopening from COVID and Putin's invasion of Ukraine. It was always obvious that this would be a passing phenomenon. It was created by external shocks which were inevitably going to pass, and therefore there was no reason for that committee to take action to control inflation because it would go away of its own natural effect. I've done a video explaining this, so I won't go into that further now. But the committee in question, the Bank of England Monetary Policy Committee, is tasked with controlling inflation. And what is glaringly obvious is that it did not know how inflation works because as a consequence of these external shocks over which it had precisely no control at all, they raised interest rates in this country to reduce demand for goods and services which they claimed would drive away inflation when that was completely unnecessary because that inflation was always, as I've already said, going to pass as a matter of fact through the progress of time. And what we now know is that that inflation has passed through the progress of time. But what we've got is a legacy of the actions of that committee. We have interest rates that are now far too high. We have a continuing cost of living crisis, particularly for many families, with mortgages that have had to be renegotiated over the last year or two. We have an excess burden of interest payments on the government itself as a consequence of what the committee has done. And we have seen many businesses struggling to pay their debts, again, because of what this committee has done. And they have done this deliberately, let me make clear. They wanted to create a recessionary environment because they thought that would control inflation. It had no impact on it whatsoever. And as a result, they have inflicted pain where pain was unnecessary. If that isn't a good enough reason to say that this committee needs to be reformed and its mandate needs to be changed, then I don't know what is. So let's go back into history for a moment. The Bank of England Monetary Policy Committee was effectively created as a result of the passing of the Bank of England Act in 1998. That act was the brainchild of Ed Balls working with Gordon Brown when Gordon Brown was Chancellor of the Exchequer, and it was intended to show that Labour was not going to be profligate with public spending when it came back into office after almost 18 years of Tory rule. It was a PR gesture. It was not a necessary thing to do, and there is no proof that having independent central banks has actually improved macroeconomic management anywhere in the world. It's true that inflation was very low in the period when they became popular, but that would have been true anyway. That was the environment through which we were living because of the collapse of the Iron Curtain in 1989 and the rise of China as a manufacturing centre. Again, nothing to do with the action of these committees. So the time has come to say, let's stand back, let's take a deep breath, let's say that whatever appeared to be good PR in 1998 is no longer good PR in 2024, and let's talk about what we really need now to manage the economy when it is clear that the Bank of England Monetary Policy Committee, with a mandate to control inflation through the setting of interest rates, has got an inappropriate task to undertake and an inappropriate tool to do it with. My suggestion, and this is something that I've discussed with Danny Blanchflower, my fellow member of the Mile End Road Economists team, is that we should be heavily reforming the Bank of England Monetary Policy Committee. We are not suggesting getting rid of it. We see real benefit in having an advisory board who can offer opinion on precisely what the government should be doing with interest rates and other economic policy. But we think that that committee should, for a start, be democratically accountable. The existing committee has no democratic accountability in it at all. It is answerable to the Governor of the Bank of England, who in turn is sort of answerable to the Chancellor of the Exchequer, but the whole myth around central bank independence is that they stand outside the scope of government, and yet they can run major policies which have enormous impact upon our country. I think that lack of democratic accountability is the first thing that has to be tackled when reforming the Bank of England Monetary Policy Committee. So let's add that democratic accountability. How should this committee be reformed? So, first of all, the governor should, of course, be appointed by the government. I have no problem with that. And secondly, there should be a member appointed by the City of London. I think that the City of London is so important in terms of its role within the economy that there is an entitlement for it to appoint one member of the committee. And there is a local government in the City of London that could do that. A very odd form of local government, I admit, but nonetheless one that might make this appointment. Then we have regional governments in the UK, the devolved government administrations in Northern Ireland, in Scotland and Wales. They are important, and they sometimes have very different views on the way in which the economy should work from that which is commonplace in the City of London. I think that is unsurprising. To suggest that London and Londonderry have the same view on all economic activity would be a surprise to anyone, and they don't, I very strongly suspect. And that would be true with Scotland and Wales as well. So each of those devolved governments should be able to appoint, in my opinion, someone to represent them on the Bank of England Monetary Policy Committee. Where else could we recruit the rest of the members from? Well, I suggest that there should be several members to represent England. So have a North of England representative, a West of England representative, a South of England representative, and an East of England representative. And MPs in the House of Commons should be allowed to vote on who that representative is when their term of office comes up for review. We begin to create democratic accountability as a result. There should also be some other advisory members. So, for example, the trade union movement remains important as the voice of working people. Not all working people, but nonetheless the biggest single voice of working people in the UK. I think it should have a member of the Monetary Policy Committee. Whether they vote or not is a matter to be decided. They need to be heard. So too do some other quite influential groups. Small businesses, for example, have very different agendas from the City of London. So it might be wise to include somebody to represent the small business community. We'd have to choose which representative bodies might appoint somebody, and they might be required to do it in consultation with each other. The point is that this particularly important group within the UK economy, who employ roughly half the people who work in the whole of the UK, should have a voice on the Monetary Policy Committee. And so too should pensioners, in my opinion, because that group of 12 million people need to be heard as well, because they have very particular needs when it comes to how the economy is managed. There may be others, but that's my outline. And what should this committee be doing as its primary task? Is controlling inflation the most important thing that they can do? My answer is no. Inflation comes and goes, but by and large needs little management, except as to its consequences, where obviously state employees should get pay rises in line with inflation, and employers in the rest of the economy should also be encouraged to make sure that their employees don't lose out as a consequence of any inflationary incident that happens. And nobody should panic when these pay rises take place. So once we've dealt with that consequence of inflation, frankly, we shouldn't be worrying about it. But this committee should be worrying about other goals, in particular full employment. It's obvious that this committee needs to advise the government on how monetary policy can impact on unemployment. And actually, that would be probably in the inverse way of what the current committee thinks. At present, it seems that the Monetary Policy Committee wishes to maintain high unemployment, and a committee tasked with keeping unemployment low would think very differently about how interest rates should be managed. We might also give it a goal of reducing inequality and talk about what that has as an impact on monetary policy. And we'd also like it to consider investment and how that will be influenced by monetary policy as well. Put those things together and perhaps add in a green twist, because that has impact on all of those issues, and we have a new mandate for this committee to consider. The Bank of England Monetary Policy Committee needs to be democratically accountable, and it needs to deal with the needs of the real economy, not the made-up financial world in which the City of London alone operates. We should not be punished for the interests of bankers. We should be having monetary policy tied in with government economic policy in this country that delivers for the benefit of everyone. If we reformed the Bank of England Monetary Policy Committee, we might take an important step in the right direction to achieving that goal.